Welcome to Talk Tickers. Today, we're taking a deep dive into SentinelOne's first quarter results for their fiscal year 2026.
That's right. We've gone through the earnings call commentary.
And our goal, as always, is to pull out the most important stuff for you. You understand how they performed, where they sit in the market, and what the outlook seems to be.
Exactly. It's a picture of, well, pretty solid growth and better financials, but definitely bumping up against some macro uncertainty out there.
Okay, so let's start with that Q1 snapshot, the headline numbers. Revenue came in at $229 million. That's up 23% year over year and actually beat their own guidance.
Yeah, a solid beat there. And their ARR, annual recurring revenue, that grew 24% to hit $948 million. They're getting close to that billion-dollar mark.
Definitely knocking on the door. And the future contracted business, that RPO number.
Right. Remaining performance obligations, that looked really strong. It actually accelerated, grew 33% year over year. So $1.2 billion in total RPO.
That's a good sign for future revenue. What about customer growth, particularly larger customers?
Yeah, good progress there too. Customers spending over $100K in ARR with them. That group grew 22%, up to 1,459.
Okay.
And maybe more importantly, the average ARR per customer expanded by double digits year over year. Hit a new record, actually.
So they're getting more value out of each customer. That makes sense. Now, profitability, how did that look?
Non-GAAP gross margin held pretty steady, right at 79%, healthy.
Okay.
But the real movement was on the operating margin. Non-GAAP operating margin improved by over 4 percentage points compared to last year. Still slightly negative at negative 2%, but a definite improvement.
And that led to positive net income again?
Yep. Fourth quarter in a row of positive non-GAAP net income.
Yeah.
So they're stringing together some consistency on the bottom line.
And free cash flow, I heard that was a highlight.
Oh, definitely. A record quarter for them. Free cash flow margin hit 20%.
20%, wow.
Yeah. And the trailing 12-month number also expanded, up 5 points. Their cash balance looks good too. Ended the quarter with $1.2 billion in cash, equivalents, and investments.
Okay, so strong revenue beat, ARR growth, improving margins, record cash flow. Sounds like pretty solid execution, especially as they scale towards that billion-dollar ARR level.
Exactly. But the question is, how are they doing it? What's driving that?
Right. Let's dig into the performance drivers. The platform seems key.
It really is. They talk a lot about solidifying their position as a leader in, well, AI, cloud, data, endpoint security, kind of the whole modern stack.
And the Singularity Platform is central to that pitch, right? Built for speed, AI-powered.
Yeah. Performance, resilience, powered by AI. That's the message. And that land and expand motion you mentioned earlier with ARR per customer growth, that's clearly working.
So getting in the door and then selling more across the platform, taking share within accounts.
Precisely. And you can see momentum in specific areas. Purple AI, their agentic AI solution.
The one that acts more autonomously.
Right. It's a triple-digit year-over-year growth in its quarterly bookings. Yep. And the attach rate, how often it's included in deals, was over 25% on subscriptions sold in Q1.
That's a pretty high attach rate already.
It is. And they mentioned sort of an estimate that adding AI like Purple currently lifts the average deal size by about 25%.
And they think that can go higher.
Yeah. They framed it as just a starting point. So more potential there.
Okay. What else is new on the platform?
Well, in Q1, they launched their unified cloud security suite, basically pulling together different cloud security tools, all running on their AI and modern data backend.
Built for real time, you said.
Exactly. Designed for real-time defense. They mentioned some good early traction, like winning a Fortune 500 industrial company away from an incumbent.
And the data side, they've been talking about that more.
Big milestone there. Their data solutions business, which includes the AI SIM offering, it actually crossed $100 million in ARR during Q1.
Wow. Okay. That's becoming a significant piece.
Definitely. And they pointed to momentum, like a big win with a Fortune 500 retailer. Apparently, the driver there was frustration with Splunk, the cost, the complexity. The customer wanted something more modern, cloud-native, AI-driven.
Interesting. So displacing legacy players is a theme.
It seems to be. Even in their core endpoint business.
Yeah.
They highlighted a win at a major Fortune 500 financial institution that consolidated several vendors down to SentinelOne. The unified platform and the autonomous security were the key differentiators mentioned.
And it's not just the huge companies.
No, they were clear to mention strong growth in the mid-market too. Seems like broad appeal.
Makes sense. So the tech is evolving, but what about how they sell it? the go-to-market.
Yeah, they're working on that too. Deepening partner relationships is a big focus. They actually launched a new program in Q1 called Partner One.
Okay, what's that about?
It's aimed at simplifying things for all their partners. MSSPs, incident responders, VARs, tech partners, streamlined tiers, better incentives based on performance, customized enablement. The goal is basically more reach, more flexibility.
And this ties into that platform selling idea.
Exactly. They see the whole GPM evolving, moving away from selling just point products towards selling the entire Singularity platform.
That sounds like a big shift internally.
It is. They acknowledged it's, a continuous journey, complexities, and training everyone up, but they believe it's the right move for efficiency and driving those platform gains long term.
Okay. Another area they seem to be differentiating is the public sector, particularly in the US.
Huge focus there. And some big wins on the compliance front. FedRAMP High authorization. That's the top level for government security.
They had that already for some products, right?
Yeah, for endpoint and their AI SIM. But just recently, they achieved FedRAMP High basically across the board for Purple AI, SAMPs, hyperautomation.
So the whole platform, essentially.
Pretty much. And the key thing is Purple AI is now apparently the first and only agentic AI cyber solution with that FedRAMP High stamp of approval for U.S. government use.
That sounds like a significant competitive moat.
It really is. A major barrier for others wanting to sell advanced AI security into federal agencies.
Did they talk about the federal sales environment? Budgets can be tricky there.
They did. They noted some near-term uncertainty around budget timing and allocation, standard government stuff. But they said the overall pipeline looks strong.
Any specific examples?
Yeah, they mentioned closing a 7-figure renewal and expansion deal with a large federal agency just after Q1 ended, in early Q2. Though they did caution, federal deal timelines can bounce around.
Sure. And outside of customer wins, any industry recognition?
Yep, got some nods this quarter. Frost & Sullivan named them a top performer for growth and innovation in endpoint security. And they won a couple of SC Media Awards, Best Endpoint Security and Best Cloud Security.
Okay, so getting external validation too. What about looking forward, new tech, the vision?
Yeah, they talked about the recent RSA conference. They announced something called Athena.
Athena, what's that?
They're positioning it as the next step for Purple AI. The vision is for what they're calling the industry's first true end-to-end agentic AI platform for cyber. Really focused on combining human analysts with AI.
So AI assisting humans, but maybe taking on more tasks autonomously.
That seems to be the direction. They highlighted some existing agentic capabilities that are now generally available, or GA, like Purple AI Auto Triage.
Auto Triage.
Yeah, it can apparently investigate incidents, orchestrate responses, and help remediate threats all in seconds.
Wow, okay, that's fast.
And also Singularity hyperautomation combined with Purple AI. That lets security teams build automated workflows using a no-code interface. Again, speeding up response.
Makes sense. Anything else interesting on the tech front?
One thing that caught my eye was this migration-free mode for Purple AI.
Migration-free, meaning?
Meaning customers can apparently connect Purple AI to their existing third-party data sources without having to move all that data into SentinelOne's own data lake first.
Ah, that could lower the barrier to entry quite a bit.
Potentially, yeah. Lets them start using the AI faster, even if their data is spread out. Their bigger picture vision is clear. Integrated data, AI protection, simplifying security.
Okay, that covers the tech and performance drivers. Let's shift gears a bit to the investor context. The macro environment came up, didn't it?
It did. They were pretty clear. Overall demand for cybersecurity is still strong. Resilient.
But they definitely saw some headwinds pick up, specifically in April. Heightened macro uncertainty, they called it.
And how did that play out?
It led to sales cycles stretching out, some customers hitting pause on spending decisions. This directly impacted their net new ARR for Q1. It wasn't quite as strong as maybe they'd hoped internally.
Is that across the board?
They said it was seen kind of globally in different pockets, but it was more pronounced on the larger deals, the enterprise segment, less so in the mid-market.
Okay, so bigger deals taking longer to close. Did they lose deals?
That's the crucial point. Management stressed they did not see project cancellations. They didn't lose deals to competitors. Win rates held up.
So it sounds like a timing issue, mostly, driven by macro jitters.
That's the narrative, yes. Primarily timing related to the volatility in April. And they did say things felt better in May compared to April. Trends improved.
Right. And were these delays more with new customers or existing ones? More prevalent with trying to land new logos, apparently. The upsell and cross-sell motions within their existing customer base were still quite strong. That fits with the record ARR per customer number.
Okay, so existing customers still expanding. How did this April uncertainty impact their guidance for the rest of the year?
They made a slight adjustment downwards to the full-year revenue guidance, only by about 1%.
Just 1%.
Yeah. They said it reflects slightly lower internal expectations for net new ARR growth for the full year. Basically, building in a bit more cushion, acknowledging the unpredictable environment, creating room to digest potential future disruption.
But they're still guiding to decent growth overall.
Oh, yeah. The revised guidance still points to 22% growth for the full year, which, as they pointed out, is still top-tier performance in this climate.
And what about Q2 specifically?
Their Q2 revenue guidance implies sequential net new ARR growth should be roughly double the rate they saw last year between Q1 and Q2. So they seem confident based on those improving May trends and the Q2 pipeline.
Okay. And profitability guidance for the year, did that change?
No, they reiterated the full-year non-GAAP operating margin target, positive 3% to 4%.
Which is a big jump from last year.
Huge jump. Over 650 basis points of improvement year over year.
Yeah.
So that focus on efficiency alongside growth is definitely still there.
Okay.
And they still expect full year free cash flow margin to come in above the operating margin.
Showing that strong cash generation should continue.
Exactly.
Speaking of cash, they made an announcement about capital allocation, right?
They did. A new share repurchase authorization. $200 million. It's open-ended.
Okay. Why now?
Well, they had the cash, that $1.2 billion pile, and they're generating positive free cash flow, which is growing. They basically said they see the current stock price as undervalued, not reflecting the fundamentals or potential.
So it's opportunistic.
Seems like it. A way to return some capital, manage share dilution from compensation, but still leaves them plenty of firepower for potential M&A if the right deal comes along.
Right. And competitively, how do they feel they stack up now?
They sound pretty confident. They really believe their unified AI-first platform approach is a major advantage against legacy vendors.
Those struggling with real-time needs, you mentioned.
Yeah, they talked about latency issues, architecture's not built for today's speed. They see their ability to keep adding new logos, unlike some incumbents, and their leadership in AI as key differentiators.
Okay, got it. That brings us to our favorite segment.
Ah, yes. The This is not financial advice segment.
Absolutely. Quick reminder for everyone listening, we are not investment advisors. This is purely for entertainment, exploring some maybe slightly out there, but plausible trade ideas based on what we heard.
All right, pitch number one. How about this? A straight long position in SentinelOne, ticker S. The thesis. You've got this improving fundamental floor, right? The margins are getting better rapidly, free cash flow is accelerating and looks sustainable. That provides some downside support. Then you layer on the signal from management with that $200 million buyback. They think it's cheap. Plus, they have $1.2 billion in cash, giving them options, maybe M&A. Yes, Q1 net new ARR was impacted by macro delays.
The timing issue.
Right. Timing, not lost deals. Win rates are strong. May looked better. And the underlying adoption trends, Purple AI attach rate, record ARR per customer, that data business hitting $100 million ARR, those are all still very positive. So you're betting that the Q1 noise was temporary and sets up for a stronger Q2 net new ARR number.
Okay, plausible. What's pitch number two? Something a bit more complex.
How about a pair trade? You go short some of the legacy CM or maybe data lake providers.
Like Splunk, maybe others.
Potentially, while going long SentinelOne's data and AI SIM offering. The idea hinges on that commentary about legacy tech limitations. The latency, not built for real time. The market needs cloud-native AI-embedded security for machine speed response. That seems like a clear secular trend. And SentinelOne's trick, potentially, is that new migration-free mode for Purple AI we talked about. If they can leverage their AI on existing data without a painful migration,
that could speed up switching significantly.
Exactly. It could accelerate displacement in that huge, arguably vulnerable legacy SIM data lake market. You're betting SentinelOne's data business grows disproportionately faster by taking share from those incumbents.
Interesting angle. And just to hammer it home.
This is not financial advice, purely brainstorming based on the call.
Okay, so let's wrap this up. Key takeaways from SentinelOne's Q1.
Well, strong results overall. Beat revenue expectations, delivered that record free cash flow. That's the good news.
Balanced against
those macro headwinds popping up in April. Led to longer sales cycles, hit the Q1 net new AR figure a bit, prompted that slight cautious tweak to the full year guidance.
But the underlying platform momentum seems intact.
Yeah, especially in AI with Purple. and that growing data solutions business. Plus, strategic moves like the GTM shift, the Partner One program, and crucially, those FedRAMP High authorizations across the platform.
And the full-year outlook still shows pretty significant margin improvement and strong cash generation alongside that 22% growth target, all backed by plenty of cash and now a buyback program.
That sums it up pretty well.
All right. And one last time for everyone, this discussion was for informational purposes only, definitely not financial advice.
And maybe a final thought for you, the listener, to chew on. Think about the speed of threats today. AI-powered attacks needing machine speed defense. How much pressure does that put on companies to move away from older, slower security systems?
Towards these unified AI-driven platforms like SentinelOne is building?
Exactly. How fast does that shift have to happen? And what does that mean for the companies, both the challengers and the incumbents, caught up in that transition? It's something to consider.